In 2026, the claim is common that market structure has been made safe, circuit breakers, backstops, regulation, and that the violent crashes belong to history. The most recent counterexample happened inside exactly that structure, and it was the fastest on record. This is the archive of the COVID crash of March 2020. This is an archive of the February to March 2020 market crash. Documented market history only. Not a forecast, not investment advice. Chapter 1. The fastest crash ever recorded. The S&P 500 peaked on the 19th of February 2020. As the pandemic's economic shutdowns became undeniable, the index fell roughly 34% in 23 trading days, a faster descent into a bear market than 1929 or 1987. 23 days, S&P 500 peak to 34%. Fastest bear market ever recorded. Chapter 2. The structure strains. The market-wide circuit breakers designed after 1987 tripped 4 times in 10 days. March the 9th, 12th, 16th, and 18th. Before that month, they had been used once in history. The VIX Volatility Index touched 82, matching the 2008 extreme. Forex. Market-wide circuit breakers triggered in 10 days. Chapter 3. The dash for cash. In mid-March, something more alarming than falling stocks appeared. The United States Treasury market itself seized. The world's safe asset was being sold, because in a true panic, everyone raises cash at once and they sell what they can, not what they should. Leveraged basis trades unwound into the chaos. The plumbing, not just the prices, was failing. Then the impossible printed. On the 20th of April, the expiring West Texas oil future settled at -$37 a barrel. Sellers paying buyers to take delivery of oil nobody could store. $37. WTI crude oil settlement price, April 20th, 2020. Chapter 4. The response. The policy response was the largest and fastest in history. Rates to zero on March the 15th. On March the 23rd, the Federal Reserve announced unlimited quantitative easing and, for the first time ever, corporate bond purchases. Congress passed a $2.2 trillion package within days. The market bottomed on March the 23rd, the same day unlimited QE was announced, while the pandemic itself was still getting worse. Prices turned on the backstop, not the virus. It is the cleanest timestamp in the whole archive of what actually sets a bottom. Chapter 5. The recovery. The S&P regained its February peak by August 2020. The fastest recovery from a 30% bear market on record. The flood of liquidity then fed the 2021 asset boom and the inflation of 2022 that the Volcker archive echoes. Chapter 6. The pattern. Across this archive, 2020 completes a sequence. 1929, where no backstop came and depression followed. 1987, where structure amplified the crash. 2008, where the backstop was built mid-crisis. 2020 is the backstop at maximum dose, deployed in days. The pattern the record shows. 1. An exogenous shock meets a leveraged, automated structure. 2. Safety mechanisms slow trading, not repricing. 3. Panic sells even the safe assets. The plumbing fails. 4. The backstop at maximum dose sets the bottom and seeds the next distortion. This archive does not predict whether the next shock will be caught as fast. It documents that the fastest crash ever recorded happened inside the safest structure ever built, and what stopped it. The archive stays open. This is what the historical record shows.